Good evening, attendance to this webinar, and thank you, Yash, for organizing this as part of Consumer Education Series. Uh, I'm Mukesh Bubna, founder of Monexo. I've been running this peer-to-peer lending platform, Monexo, with the license from early days of 2018. We were the first few companies to get the license. Prior to this, I was with Citibank for more than 20 plus years across India, Singapore, and Hong Kong, working in consumer bank. Very deep understanding of how banks work and how credit risk works in these organizations.
Great. And I know Mukesh, post I started Alt Investor, we were doing a piece on P2P lending itself. And he was actually the one who told me about ALM, the asset liability mismatch concept, which I think we discussed it before. And then soon later, Silicon Valley Bank also blew up. And that's when we wrote about it for the first time as well as a concept. And it has got great response. And finally, I think the P2P association also stopped the instant liquidity product, which I think Mukesh will talk more about in terms of why it might not be regulatory compliant. So, Mukesh, over to you. Your screen share has gone off again. So maybe you want to share it again and then let's get started. And guys, if you have any question during the presentation, feel free to pop them in the chat or raise your hand during the presentation as well. We can take those questions. If you prefer at the end, we are happy to do that as well. But yeah, put them in the chat so we can pick them up.
So, thank you, Yash. Good evening, folks. We have exactly about now, we are at almost 2010, so we have 50 minutes. I will try and keep it fast, but touch upon the key points. And if you'll see, I purposefully said regulation, risk, and then returns. A lot of us only look at returns. Some of us look at risk also. But regulations is the first foundation of a product. And specifically in alt invest community, a lot of investments are going into products which are still unregulated. Doesn't mean they are not going to get regulated, but you have to understand the contours of regulation once it's been regulated. Now, in India, RBI is regulating the industry, but in USA, this is actually done by Securities Exchange Controller or SEBI equivalent. So it's very different in different markets. In UK, it's FCA, Financial Controller thing, which is exactly like RBI. So authority, yes. So we have been very close to UK market in all our regulations, all our legal aspects. So even here, RBI picked up what is happening in UK rather than SEC. Just to take you very briefly on the timeline, the first company to start P2P lending was in UK called Zopa. After almost 20 years or 18 years being a P2P lending company, about 2 years back, they became a digital bank. And there's a digital banking license you can obtain in UK, and they are a digital bank now. In 2014, there was a consultation paper written by SEBI, and it was on crowdfunding, and it talked about various types of crowdfunding, equity, rewards for donations, and B2P lending. And RBI was very clear it will do, SEBI was very clear that it will regulate the rest as and when it requires, but it will never regulate P2P lending because it's lending activity, and it suggested in that paper that RBI should look at that. Following that, in 2016, RBI came out with a consultation paper in which broadly all the contours were there which moved to the guideline, but two things were broadly missing. One, that P2P lendings have to report every transaction of lending and repayment into the bureau. Number two, it was missing the fact that there should be an escrow account. Monexo took a lot of lead in that process, showed RBI the various guidelines of UK and what the benefit for the consumers will be, both from a lender perspective and from the borrower perspective, from their protection point of view, if we report in the bureau as well as having an escrow account. So in 2017, when the guideline came, it was all about those two as a major factor. And I'll surely talk about few more guidelines in the next few slides. When the 2017 guideline came, RBI put again from a consumer protection point of view, a 10 lakh rupee cap across all platforms, which it revised to 50 lakh rupee per investor in 2019. From 2019 till date, RBI hasn't made any changes. It was only a speculation that it will allow secured loans to be done, but nothing has been done. But from 2019 and we are sitting in 2024, RBI has not changed anything in the guideline. It has only recently, through the deputy governor, made a comment, which is available online to be read. But as of now, that's the guideline. So I will, without much ado, I will talk about very, very simply. It's a very small, thin guideline, uh, but I've taken one section, and if anybody is interested, should read para 6. Okay, if you read that, this will come out. What a P2P lending cannot do. It's on the left hand side. P2P lending companies cannot lend on its own. So that means Monexo cannot raise capital like an NBFC and start lending. No, it cannot. It cannot co-lend also in any loans. I cannot raise deposits as a Monexo company, and I'll explain what deposits mean. And this is what is happening currently, and this is a clearly written no. So if anybody says to you as an investor that RBI has not said so, no, RBI has already said that you cannot raise deposit. It cannot provide or arrange any credit enhancement or credit guarantee. So this again is what a lot of platforms are doing today. Margin of safety is nothing else but credit enhancement or credit guarantee. P2P lending companies, unlike an NBFC or bank, is only information aggregator. It is not a credit aggregator. So the investors or the lenders should be able to see all the details of a borrower and decide to lend to them. So again, 2 points, deposit taking and margin of safety we'll discuss. And it cannot hold on its balance sheet funds received from lenders for lending or fund received from borrowers. So escrow account is a must. Every company complies with it. But what happens behind that escrow account is very, very critical. And what it must do is, again, what services it should do. Again, due diligence of the participants, and participants are both lender and borrower, right? So borrower, lender will go through KYC and AML and anti-money laundering, but a borrower will go through KYC, AML as well as a credit assessment. It again gives the authority to P2P lending companies to do a credit assessment and risk profiling of the borrower and disclose it to the lenders. Now you will see a lot of platforms don't show anything. They just tell you, give me the money, I will for 3 months and I'll give you 9%. So that's exactly between it cannot raise deposits and it does not disclose. Then these two put together, it's nothing else but a deposit. Consent-based access to credit information. So I cannot access, in this case, let's say Yash comes to a platform. I have to take a clear consent to get his credit assessment done. I cannot take it from an investor. Investors will not give us consent to access their credit information, but the borrowers have to do it. Without that, we don't lend. We have to do documentation of loan agreement between the borrower and the investor. Yes, we are party to it because investors are giving us certain rights to do the collections on their behalf and legal, as well as you're giving some rights to the escrow company to do. But they are four-party agreement. But the two key parties who have commercial considerations are the borrower and the lender. Assistance in disbursement and repayment of loan. So when investors invest, let's assume somebody is borrowing 10,000 rupee. There are 10 people who gave 1,000 rupee each. Each escrow account is debited and the 10,000 rupees transferred to the borrower. Next month, the borrower starts paying back, and in pari passu, in the ratio of the investment, the money is given to the investors to reinvest or withdraw. And P2P lending companies should provide recovery of loans. This is the broad crux. There are a lot of other criteria about net owned fund, etc. But this page is the crux, and this is where currently a lot of people are playing outside the regulation. I've drawn two diagrams. One which says regulation is the supreme. Within the regulation, you create your legal document, and within that, you can play your business strategy. But and on the other side, the diagram B, which says a lot of people are doing different regulations, reading the regulation, but writing the legal document differently, and they're playing business strategy outside. Now, I leave it to them what is right, but as I can understand, based on my 25 plus years of experience in business and specifically dealing with various regulators across the globe, it is diagram A, which is both in uh, safety for the investors also as well as for the company. Silence of a regulator for a long time does not mean it's given a consent to do a wrong thing. Uh, Collective investment scheme. Mutual fund, very simply put together, is a collective investment scheme. We will go through this. I have a 5-minute video which Yash can play after this. But let's understand what happens in a mutual fund, right? We are three investors, each of us on board on a mutual fund on the same day. That pool is given 3 lakh rupees given to the fund manager decides he does not need to come and ask us as investors whether to invest in HDFC Bank or ICICI Bank, TCS or Infosys. He does that. And let's assume if it's a closed ended fund, it has a maturity, right? Or if it's an open ended, if all three of us want to exit on a particular day and if the fund is sold at 3.3 lakhs, we all make 10 lakhs at 10,000 rupee each. But in P2P lending, this cannot happen. Why? Because there are plethora of loans. Mr. A, as an investor, takes loan 1 to 100. Mr. B takes 20, loan 90 to 100, and then from 100 to 150. And Mr. C is investing loans in loan number 200 to 350. So he's got more diversification, he's got no overlap, and for whatever reason, the delinquencies are only in the loans 200 to 300. That means Mr. A and Mr. B will get a very different return than Mr. C. Number two, in P2P lending, each investor is his own fund manager. He has to give instruction by choosing a loan or a auto diversification process where he gives clear instruction, not consent in the TNC that you can give me this money, we will invest, and you'll get 8% after 3 months. No. And finally, mutual funds are allowed to hold a percentage of AUM for redemption. So a lot of companies are giving you instant redemptions, etc. But in P2P lending company, the money is held in escrow account. I have no authority to debit your money and give it to Mr. B if he comes for redemption. So three practices. One, giving a standard return, pooling the money, all makes it look like a CIS. Harsh, Yash, can we play the video? It's a 5 minute video, guys. Please watch it. It's uh, it's taken out from a 1 hour video so that it's shortened and everybody can understand what the points I'm going to make from here onwards.
Sure, let me know when you can see the screen, then I'll play the video.
Two version of P2P. वर्जन वन पहले एक लेंडर का पैसा selected set of borrower में जाता था and those borrower was linked to that lender. Performance of those borrower determines the return which comes to the lender. So every lender return was different. Some lender could get 17% return, some lender could get 7% return based on the performance of the borrower set which has been assigned to them. It's a system driven, automatically given. But now, from almost couple of years, scenario has changed in most of the platform. Version 2 of P2P. It has become like a FD. Everybody gets a fixed return. Select the tenure, fixed return has been told upfront. Everybody will get the same return. So it goes like a pool. It's not a pool in a very strict sense, but it works like a pool. Every lender puts the money, borrower gets the money, and every lender, based on a tenure, whatever the return has been told to them, gets that particular return. That's how the thing works. It's become very stable now. अभी 7% and 17% का difference नहीं मिलता. If it is 12%, everybody get 12%. These are the returns which customer or a lender would use. All those work has been taken care by the platform. Lender just puts the money, select the suitable schemes, and get the money back at the end. However, get liquid fund, they can get around 8% return. They have a SIP scheme also available. So if there is a fixed expense which a client has to do, he can plan for that. Holidays, children education fees, insurance premium, something to plan, they can start an SIP and get 8% return on this. Liquid fund, anytime withdrawal. 3 महीने में 10%, 6 महीने में 11%, 12 महीने में 12% फिक्स रिटर्न मिलता है. Here it is called FMP. हम म्यूचुअल फंड में जो FMP कहते हैं ना, फिक्स मैच्योरिटी प्लान, P2P में MHP कहते हैं, मिनिमम होल्डिंग पीरियड. अगर आपने 1 साल के रखा, you are supposed to hold for 1 year. There is no withdrawal in between because the money is already landed. There are certain schemes available by certain platform which also give you flexibility like FD of partial withdrawal, where if you keep money for 1 year, you'll get 9%. But in between, if you withdraw, you'll get 7.25%. So if you want a flexibility of withdrawal, select a different scheme. And if you're okay to lock in, select a different scheme. Needless to say, locking scheme will have a higher return than a flexible return scheme. And there is a monthly scheme option available. You can have a monthly scheme for 1 year, for 2 years, for 3 years.
Yash, we can pause it.
10.5%, even 12% version of.
So you can see in this video, there's a direct discussion around this is like an FD. It behaves like an FD where you just give the money and then you move on, right? You don't have to worry about anything else and everybody gets the same return. So if that's happening, pooled money is nothing else but CIS. It's very clearly differentiated. And if you would have followed recently, SEBI had banned one of the alt investment company, Gropital, which was into the agricultural space. And the moment you cross 100 crores, it becomes a CIS. And most of the platforms in P2P lending platforms are above 100 crores. So this would be very, very close wire, red wire touching a CIS platform. Now, we also heard in this conversation fixed deposit. So let's talk about term and fixed deposit. There's a very clear mention in P2P guidelines that P2P lending companies cannot take fixed deposit. There's no ambiguity. It in fact says P2P companies cannot violate section 45 IBB of RBI Act. And what does fixed deposit look like? Or if you go to a Bajaj, what does Bajaj do? If you open Bajaj website, Bajaj Finance website, it will tell you if you want to make a deposit, choose the term and choose the amount. That's all it asks, right? Today, a lot of P2P platforms are doing exactly the same. So, how is not of that a fixed deposit? You don't have the ability to choose the loans. And even Bajaj Finance or any NBFC which has a deposit taking license cannot take deposits less than 12 months. So, how can a P2P lending company take a product where it says I will be able to guaranteedly, in a way, be able to return the money after 3 months with the returns? There will be always delays, there will be always defaults. When anybody takes money for a particular term, they cannot be sure that they will be able to lend only for that term. And that's what causes asset liability mismatch. Let's assume I am a borrower, I want to borrow 10,000 rupee for 6 months. And all of you want to lend, somebody wants to lend for 3 months, somebody wants to lend for 6 months, somebody wants to lend for 12 months. What will happen then? Because I will pay EMI every month, will the platform keep the money uninvested? No, they have to invest money because they have to give returns. So what will happen if the EMI is reinvested? 3 month product will again go become 4th month product, and so forth. But in asset liability mismatch, there are three different points. One is amount mismatch, one is rate mismatch, one is tenor mismatch. Rate mismatch is great. We should always have, that's how most people make money. But what happens if there's an amount mismatch? Let's assume depositors in a bank brought 3 lakh rupee and the bank can only lend 1 lakh rupee. That means the bank has to pay from its own pocket the interest of 3 lakh rupees but has only earned on 1 lakh rupee. That's not a good thing to happen. And in P2P lending, we cannot do that. So a lot of companies, if they're taking the money today, your interest meter starts today itself, right? What about if they have not been able to lend it out? And it's quite possible that they cannot lend it out on the same minute, same day. There would be something left behind. On the tenor mismatch is what I spoke about. Let's assume the bank gives borrowing for 24 months and takes FD for 12 months. Now they are assuming that somebody will roll over. But what happens if that all the investors decide to walk out? Then there will be a problem on that the borrowers have not paid and the platform has to pay. The banks can manage, banks have to maintain SLR, statutory liquidity ratio, and CRR, cash reserve ratio, with the RBI. But you can think of a big company, ILFS, defaulted due to asset liability mismatch. And RBI has a separate guideline for asset liability mismatch for NBFCs. Again, I'm going back to the fundamentals that P2P lending platforms are only information intermediaries. They are not credit intermediaries. So they should not have an asset liability mismatch. They should not have a credit risk by maintaining margin of safety. They should disclose all the parameters to you as an investor, and then you should invest. Uh, is P2P lending like liquid funds? Luckily, I am happy that my industry peers have decided to stop it, but it came too late. They took a lot of risk. It was only after the deputy governor made a comment in the CII meet in February that the industry players have come together and stopped it. And on the record, Monexo is not part of that association because we don't believe the topics have been completely handled still. They just handled one part of it right now. And if you look at liquid funds, what can they invest in? They can invest in only 91-day papers, only in money market bills, treasury bills, which are very easy to liquidate. And they are allowed to hold 20% of funds liquid. So if they collect 10,000 crores, they will need to only invest 8,000 crores, and the remaining 20 they can keep liquid. And the 8,000 crores can only be invested in 91-day paper. P2P lending cannot do this. P2P lending gives loans of various tenors. It can be 1 month, 1 day, 3 years. And EMIs will come on a monthly basis, weekly basis, daily basis, and they have to be reinvested. But if you look at the three news articles here, right? This is 2008. There was no crisis. It was not COVID time. RBI had to inject 20,000 crores into mutual fund industry. Otherwise, redemption would have brought down the whole stock market to the knees. Right? This is during the COVID time, when the COVID had only started March 25th, 2020. Mutual funds already reached out to RBI and saying, help, there's a sharp increase in redemption. If we have to meet this redemption, we'll have to sell the stocks. If we sell the stocks, the price will fall more, and more the price falls, NAV will go down, and there'll be consistent viral spiraling downwards only. And this is 2022, not again in COVID time, outside COVID. Again extends liquidity support worth 50,000 crores. Now, do you think any RBI would come down for a P2P lending industry? This is a huge industry, mutual fund, and it has got a bigger ramification. But if today or tomorrow, if any P2P lending goes through a liquidity crisis, will RBI give them a lending hand? No, it will not. It's not their role. Yes, I understand Yes Bank was bailed out, but these we are very small as an industry together. So there's no bailing out going to happen. So from an individual investor perspective, it's very important to understand we are here to take business risks or loan risks. But why should you get into regulatory risks? Daily interest payout was an issue. Still, some platforms try and do it. Borrowers do not pay daily interest. They're paying monthly EMI. They're paying interest along with that EMI. The platforms can only accrue interest. If that platform allows you to take that interest out, that means they're involving their balance sheet. Because without their balance sheet involvement, how are they paying you interest even before it is collected from the investor, from the borrower? So be very careful when you see daily interest withdrawal. There were a platform, unregulated P2P lending partnership between a very large fintech and a regulated. They were doing this for a long, long time. I think I'm told they're not doing it anymore. But there could be other fintechs which could be doing it. So beware of that. I just want to say this can be read roko mat जाने दो या फिर रोको मत जाने दो. It's very subtle difference, right? We believe Monexo and all the P2P lending companies should understand this difference, subtle difference between these two sentences with a single comma. And from an RBI perspective, they are very clear that the guidelines is in black and white. It's very, very clear what it can do, what it cannot do. And we have seen various fintechs who were thriving in a very, very big way got impacted, and they were billion-dollar companies now. But when RBI came down and set the regulation, all those companies had to take a back seat. Luckily, they were not investment companies; they were all lending companies, so the borrowers may be very happy with it. But you are putting your hard-earned money, so you should understand regulations. Yash, we can take a break before we get into some questions on return and risks.
Sure. Does anyone from the audience have any questions in the meanwhile? From what you have understood, that P2P is not a CIS, P2P cannot offer liquid products, P2P cannot allow you to do daily interest redemption. If anyone has got any questions, just raise your hand or pop them in the chat. I'll pick them up. One question I have, Mukeshji, is if RBI regulations are black and white, what will make them enter into this whatever cartel has been built and stop it right now? Because the comment also came a little late from your perspective as well, and it's still not solving the bigger problem, which is fixed in your products as well. So what will make them come in?
See, I think RBI has already given the first warning in a public speech, right?
Hmm.
That's what is available in public domain for everybody to hear. Separately, there has been a lot of supervision which we can make out from the statements made by the platform themselves. When they stopped liquid funds, they said we've been under regulatory supervision and we are pausing this. But what else they have told uh, is hard to figure out because that's 1:1 between RBI and the platform itself. Uh, but it's in the radar of RBI. When will RBI drop or take out the knife and cut the butter? Hard to say. Uh, but it is something which we as a consumers have to be, as I say, caveat emptor. We have to be aware of what we are buying.
Hmm.
One is taking the risk of delinquency, but one is taking the risk of regulatory, and where the regulator says, stop this business
Yeah.
or stop new fund flow, and then you, all of us as investors, can get stuck because there's no liquidity, right?
Yes. Now, something like that has happened in the Groupital, so I'm sure people are aware.
Yes.
Regulator just came in, froze all their accounts, and now people are waiting to either liquidate or at least get some clarity.
Correct.
Um, Someone has asked a question, wish to know your opinion on a P2P company called Falcon Group, who are doing invoice discounting and they claim as zero defaulters till date. I don't think it's a P2P company, it's a invoice discounting company. Maybe they have mentioned it on as P2P. But Mukeshji, do you have any opinion?
No specific opinion. I don't think so. Falcon is into P2P lending. Invoice discounting does not classify into P2P lending guidelines at all. That's number one. It has a different, altogether different structure to be managed. Uh, and, and I think the expectation of zero default is only possible where you are into fixed deposit business, guys,
Mm.
or you are maintaining margin of safety. I've been in lending business from 1990s. A lot of evolution has happened in the lending business. Credit bureaus have come, alternate scores have come, right? Mobile data is available. Whatever said and done, you cannot predict the future completely. You can manage risk, but you cannot have zero default. If anybody tells you zero default, it could be for a particular period of time, but the defaults will come. And our expectation of investors should be very clear that I'm okay to have this level of default. Beyond that, I will cut myself off. So this is not, it should not be in your own investment uh, allocation. I would not recommend more than 5 to 10% of your investment surplus to be allocated towards P2P lending.
Got it. Question from Abhishek. Is there a specific definition of NPA for P2P? Do you consider NPA if a single loan is 15 days past due, 30, 60, 90, or 180 days?
So, as the same guidelines apply to everybody, anything above 90 DPD is NPA, non-performing asset. Okay, I'll give example. Let's assume I am a borrower on a platform and I am supposed to pay 1,000 rupees every month. Today we are standing on April 14th, 11th. I did not pay in January, I did not pay in February, I did not pay in March. On April 1st, I am a NP on that platform. Now, in April 3rd, my fourth EMI is due. If I pay only one more EMI, I pay one EMI only, I'm still not out of NPA because my three EMIs are due. To be out of NPA, I have to pay two EMIs at least. This is also a good question, and a lot of people, because we are like, this is what definition of a within the bank I followed through, and we've had discussion with RBI on this. Few platforms just roll that customer back to normal. It is not, it is NPA only. It stands under NPA till the customer on 4th of April pays two EMIs. So the moment three EMIs are overdue, it's an NPA.
Thank you. Question from Devanshu. What is your view on Chinese ownership of P2P NBFCs?
Chinese ownership, I don't know. I should not have a view. Regulator should have a view on that.
Okay. Question from Sumit. Do other international markets like the UK or US have a different P2P framework where the CIS or assured return version of P2P is accepted?
So in the beginning, if you missed it, US P2P lending is almost like issuing notes, uh, and it is regulated by SEBI equivalent Securities Exchange Commission there, right? But in UK, it is managed by and regulated by FCA, Finance Control Authority, which is similar to RBI. In both the markets, I have not seen margin of safety being deployed at all. The moment you've taken margin of safety, you become from information company to a credit company. Think of, very simply put together, Amazon, which does not take stock but brings buyers and sellers together. So, are you expecting Amazon to take your bad product and give you cash back? No. He will go and back and debit the seller if you return the goods. The role of Amazon is only to make sure the payment comes, they do deliveries, etc. So in P2P platform, we are exactly like Amazon. But there are
I
companies which
mean,
take, sorry, go ahead.
no, I was asking, so the assured return, if they don't take on margin of safety, they can't offer you assured return at all, right?
Yes.
There's one more question. Do you or do you not recommend features such as auto invest in secondary market?
Okay. We'll break this question into two parts: auto invest and secondary market. Auto invest, there are again two ways of doing it. One, where it is hidden in the consent of the TNCs. One, where the investor comes and says, I want to invest X rupees per loan and I want to invest in certain criterias. The first one, in my view, is not okay. Where it's consent, you have no ability to give instruction to the platform. The second one is a convenient tool to somebody who's investing, let's assume, 50 lakh rupees. Do you expect that 50 lakh person to log in 25 times in a day and choose loans? No, he will not. And tomorrow this 50 lakh becomes 2 crores. Do you expect somebody to literally sit down and do it? No. So it's a convenience feature within the guideline. When you talk about taking P2P lending platform being an information intermediary, I'm taking your instruction. And you are telling me exactly what you would do on a stock market and say, I want to buy a stock A at 100 rupees. I want to sell it at 110. Automatically, don't wait for me to log in again. And if it goes to 95, I want to sell it. So that's what auto invest feature is. Again, instruction versus consent is very important. Second, secondary market. Again, secondary market and replacement of loans are very different. Let's go back to a platform which offers you 3-month product at 8.5%. Now, they cannot make sure all your money goes only for 3-month loan. It's impossible. I can tell you, I've run a bigger bank than any of the P2P platform put together in India. And I was a CFO, Asia Pacific, managing finance, working very closely with Treasury. We used to always have that gap. Always. Either we were short on liquidity or we were excess. Now, what happens on third month if Mr. A wants his money back? Today, what is happening is the platform is taking money from Mr. B, Mr. C, Mr. D, whose funds are lying, and giving it to Mr. A. Mr. A feels very good that, wow, I got my money back. And that happens in 5 minutes. How is that possible? The borrower has not paid. There may be few defaulted or delayed payment also, right? We all have credit cards, I believe, in our pockets. I have missed my credit card payments by 1 or 2 days, or I've paid it earlier also. So that is called replacement of loan. A secondary market is where you take the instruction from a investor, you display those loans to all the investors, and they choose whether to buy or not to buy. Number one. Number two, if Mr. A has loans which are already delayed, even for 1 day, they should not be allowed to be traded because Mr. B, who's buying it, does not know that they are bad. In the replacement of loan example I gave you, those platforms are just flipping all the loans from Mr. A to Mr. B to Mr. C. But in a secondary market, when you take instructions, you display the loan profile, and you don't allow the bad loans to be traded, then it's fine. So I've answered both sides: auto invest, instruction versus consent, and again, secondary market versus replacement of loan.
So, I mean, in your secondary market, if a loan has already been delayed or defaulted, you wouldn't allow it to trade in the secondary market.
No.
That's the gist from a secondary market point of view, right?
Yes, as well as we'll show all the details to the new buyer before he
Right.
believes to buy it.
Got it. Question from Devanshu. Any view on net owned funds for any NBFC P2P? 2 crore rupees. And does Monexo maintain this net worth?
So, two parts. Again, if we compare this with UK or we compare this with NBFC deposit taking companies, NBFC deposit taking company to get a license requires to have a 50 crore initial license fees. And if you are a new NBFC coming up, you require 5 crore. And P2P lending companies require 2 crores only, irrespective of the asset under management. In UK, this is slightly different. In UK, whether you have a $1, £1 of asset under management, you require a certain amount of NOF. But as your NOF grows, as your AUM grows, you are required to bring a lower percentage of NOF again. So it's not 2 crores for up to 1,000 crores. Maybe 2 crores will be up to 100 crores. The moment you cross 100 crores to 300 crores, you may have to bring not 2 crores again, but maybe 50 lakhs, etc. So this has been progressive capital requirement in UK. In India, it's very simple. I believe as the industry matures, RBI may adopt that. But as I said, P2P lending companies are not deposit taking company. So they don't start with 5 crores and 50 crores. And over and above that, they don't need to maintain 14% of capital as required.
But do you maintain this net worth as well?
Yes.
Question from Abhishek: do P2P lenders share defaulting customer registry, or do you rely only on credit bureaus to get it reported on trade lines?
What is credit registry? If there's only credit bureaus. There are four
Hmm.
credit bureaus in India: Sibyl, Equifax, Experian, and CRIF. P2P lending companies can, during underwriting process, can do take report from any one. Need not take
Only
all.
one.
Can take from any one. It need not be all four. Okay, because all the banks, all the NBFCs, all the regulated entities will report into all four, right? So let's assume I have a credit card from HDFC, I have a car loan from ICICI, and I have a housing loan from, let's assume, Fedfina. All have reported my loans in all these four bureaus. And if I'm not paying, all the four bureaus will know I'm not paying. So during underwriting process, any P2P lending platform can go to any one platform, two platform as per their own algorithm and look at these details. But if I'm not paying to any P2P platform, they're supposed to report into all four. All four should have the same information. The score may be different. It's not about score, it is about trade lines and my payment history. That has to be common. Each bureau follows a very different algorithm for defining their credit score.
Four. Yeah. Okay. And do you, as Monexo, also report to all four of them for default?
Yes, yes.
And is
Even
it built in
even
your? Sorry, go ahead.
even in our case, I will tell you, a lot of banks don't report up to 30 days of default. So
Okay.
example, if I'm supposed to pay to HDFC Bank on 3rd for my credit card, but I don't pay on 3rd, I pay on 25th. They
Hmm.
will not report me delayed by 22 days. But Monexo will report if Mukesh Bubna went to Monexo and took a loan and did not pay on 3rd but paid on 25th, we will report into bureau that there's a 22 days delayed by Mukesh Bubna.
Okay. And for the lenders, borrowers that come on your platform, is it built into your business rule engine that it will reject the PAN if there's a default on another platform, another P2P platform?
As long as the P2P lending platform or any regulated entity has reported into the bureau and that's available, we will reject any delayed customer, defaulted customer.
Right. I don't have any more questions from anyone. Audience, any more questions that you would like to ask Mr. Bhuvna? Do you also have a secondary sale mechanism, Mukesh, on your platform?
Yes, we do.
Is it fairly liquid or it's very sporadic whenever someone does it?
It is, we don't guarantee and we don't maintain the liquidity reserve and we don't do replacement, so it is sporadic. We never sell the
And
product. We never sell the product with fixed term. We never
uh,
sell with a particular assured return of 8, 10, whatever the schemes which we saw in the video. And we never promise as a liquid product.
yeah. So what's the average yield on your platform?
As of now, give or take between 12 and a half to 13 and a half. We do have loans ranging from 13% to 20%.
Uh,
20% is very high risk loans. Those are what we call in the industry short term personal loans for 1 month to 6 months, 1,000 rupee to maybe 15,000 rupees. So these people are looking for a very, very short loan period, and those are ones which give you 20% return. We believe they will have a little higher NPA The ones
Mm-hmm.
which we give at 13%, we have seen a very, very low default as of now. And we've been in that market for 3.5 years during COVID also. So we are confident of giving 13% as of now. But again, no guarantees. That word does not exist in our dictionary. Guarantee word has been deleted on day one when we enter the Monexo business.
Mm-hmm. Okay. Another question that I've got is there any RBI restriction that disallows P2P NBFC to underwrite any asset-backed loans like a vehicle or a home loan?
Yes, P2P lending companies can only do unsecured loan. So we cannot do a hypothecation, anything. So if you want to give a loan on a car, which is if I go to a bank, I'll get a loan at 8.5%. But if you give a 8.5% loan of a car without taking hypothecation, you're taking abnormal amount of risk at 8.5% return, right? So that's why it wouldn't work out. Uh, but yes, I've seen certain practices where people have started working with a gold company. I don't know how that works, but I think they're touching a red wire there.
Okay. Another question from Sumit. In the India context, is there a balance between investors and borrowers, or is one higher, and by what proportion? Uh, High level of investors are short, and what can be done to get the right profile of customers to P2P? So, I mean, question is there a balance between the investors and borrowers in broader context? Like, do you have a constant supply on both sides?
So any definition of marketplace will always have an imbalance.
Okay.
Never a marketplace. Look at Uber, look at Ola, right? Look at Amazon. Are they able to sell all the fridges they list? No. Are they Uber riders always busy? No. But what happens in Uber and Ola, the mechanism to bring the parity between supply and demand is surge pricing. So the people drop off, or a lot of more drivers come into the picture, right? Where they give incentive for Diwali time to for all the drivers to be available. They give incentive when exams are happening, so the drivers come and there's a surge pricing. But in P2P lending, it's a risk and reward. I cannot, just because I have a high supply, I can't drop the interest rate, right? Or tomorrow I don't have the huge supply, I cannot jack up the interest rate, because the borrowers have other options also to take the loan, right? So I cannot play around with price as surge pricing. I can only do risk and reward equation. So if I am underwriting Mukesh Bubna, and as per our algorithm, it shows that it is a conservative risk, maybe the return to you will be 13%. But if it comes out as a very high risk customer, we'll give you 20%, because you are taking the risk. Platform is only providing you with the information and will support all the way to do collections.
Got it. Another question, is it okay to compare P2P products with fixed deposits for marketing? Do you think it is ethical?
See, you need a reference, right? Ethical is a question which everybody thinks differently, and we know India is it's different, but everybody has to be given a frame of reference, right? Now,
Hmm.
yes, at the same time, if you don't highlight the risk, P2P lending has risk. Fixed deposit has no risk up to 5 lakh rupees. After that, they also have a risk. But if both is not told to the investor, but it is sold like the way it is being sold currently, that you give me money and you watch the video where it is being sold. He said it's like a fixed deposit, but it's not a fixed deposit. It's a duck, right? It walks like a duck, quacks like a duck, it's a duck. You can't call it a chicken. So, with that said, fixed deposit comparison is only from that perspective, that you can share and explain both the risk and reward to the customer.
Got it. Mm. Any more questions from the audience? I assume not. Mukesh, I have a question. A lot of defaults can still happen in the 13% or 20% space. how do you, let's say, recover them, and how long do you try to recover them?
Okay. I'll answer the last part of the question and then I'll go to the recovery process. We have recovered a loan last week, which was 1900 days delayed.
1900 days, so 6 years roughly.
6 years, yes.
Yes.
6 years. And why did that person pay? Because we won the court case and we had an arrest warrant, right? It was not about his ability. It was never about his ability. It was always about his intent. And he wanted to see whether we will have the guts to go all the way down or not. In this whole process, surely Monexo did not make any money because we don't charge any of our investors for collections. And we pursued this case. I think the case was adjourned at least 35 to 40 times. 2 years the court was closed, right? But we pursued it and we collected. And that time we used to give loans up to 5 lakh rupees. It was full 5 lakh rupees plus the interest we recovered from the customer.
Wow. Okay.
The process, exactly like a bank, soft telecalling, SMS, WhatsApp, recorded calling, all these is soft collection. Then field collection and then legal. We do all of it end to end. And we don't give up. For us, we believe we have taken somebody's hard-earned money. It's not like we can sell this loan down to an ARC. We don't have that authority.
Okay.
RBI has not given us the authority to do a pool and sell this and recover 25 paisa for every 1 rupee. No, we don't have that authority. That authority rests only with the investors. And it's very hard to create a pool and then go to thousands of investors and get their permission, right? But the authority which is given by the investors to us is that we should pursue legal case, we should send a human being, and we do that.
Okay. One more interesting question that I've got is, would you support P2P investors coming under DICGC at the cost of the P2P platform? It will ensure some of the investor malpractices to stop.
Uh, it is difficult. See, RBI will not support, and it's the pie is this. Whether you want to cut into DIGC, yes, it's a good practice to be done. If you can give an assured or a guaranteed return, it's great. But your yield will come down.
Hmm. You'll
If I
have to
tell
pay for
you,
that safety.
correct, somebody has to bear the cost, right? And the borrower is paying X, and that X is being divided between you and right now the platform, right? Tomorrow there's a third player, we have to pay them, so it will come to either from our cost or your cost. We're already working on a wafer thin margins, right? To maintain such a large infrastructure, it's not easy, and technology keeps changing. I'll give one more point to you guys that I have not seen that anywhere. In UK, there were companies which were maintaining margin of safety, and they all went down. They all went down. Zopa never maintained margin of safety. It continued. Now,
Okay.
the flip side of this is diversification. One, you are diversifying your 100 rupee or 1 lakh rupee of investment, 5% of that into P2P lending. But that 5% you are buying many loans. I have customers for whom I manage 3 to 4,000 loans, and they are just earning happily passive income of 50,000 rupees. They don't have a, they don't want to manage each loan themselves. And once with you have done 4,000 rupee, 4,000 loan diversification and earn 6 lakh rupees, and each loan has got maybe 1,500 rupee to 2,000 rupee investment, just imagine that you have to lose 300 loans before your capital for 1 year is touched, right? And if you've been in the 3 years in the journey, you've earned 18 lakh rupees. That means 900 loans have to be defaulting. Then only you will be losing your capital. So this P2P lending platform gives you the ability to diversify in a large number of borrowers, and that's very important.
Got it. Any more questions from anyone? Otherwise, we'll probably end it here. We are already over time.
No, thank you very much. This was again nothing to do to promote Monexo. It was all about consumer education. We believe we all should take a very educated investing. P2P lending has grown across the globe. China exactly failed for the reasons which is happening in India, and the regulators clamped that down. There was no regulation till 2016 out there, and that industry started in 2008 in China. In India, we have regulations from day one. We are not following it. That's a separate issue, right? If anybody is interested, I will forward you the research paper. Why did China fail? But in US, it's doing very well. In UK, it's doing very well. In Australia, it's doing well. In various parts of Europe, it's doing very well.
Thank you so much, everyone. Thank you for joining. Thank you, Mukesh ji. Very, very helpful as usual. And if anyone has any questions, you're part of the community to ask them here. Mukesh ji is also part. He'll answer them. Thank you so much. Have a good night.
Thank you, guys. Thank you for coming.
Thank
Good
you.
night. Thank you, Yash.
Thanks. Bye.